Good evening, ladies and gentlemen, and welcome back to Qnews. We continue our special economic coverage for the second day, and we will carry it through the coming 2 days, bringing you top stories and expert analysis on the events and trends shaping the regional and global economy. Throughout the week, we'll spotlight the most influential sectors and the defining economic stories of 2025. Before we begin, let's go to our colleague Hala Al-Hamalawi for a look at 2 nights' top economic stories. Hala, what do you have for us?
Thank you, Rana. Well, we do have lots of economic stories, and we start off our economic news with the UN Secretary General Antonio Guterres, who has warned in his New Year's address that global military spending surged nearly 10% in 2025 to a record $2.7 trillion, 13 times larger than all the development aid and equal to Africa's annual GDP. He highlighted the contrast between rising arms budgets and ongoing conflicts, climate challenges, and systematic poverty, urging leaders to invest more in people and the planet rather than war. Guterres said that the world has the resources to lift lives and secure peace, calling on leaders on 2026 to prioritize sustainable development and human well-being over militarization.
This new year, let's rise together for justice, for humanity, for peace.
In Europe, a survey by the German Economic Institute, IV, has shown that most German business associations expect job cuts in 2026 amid ongoing economic challenges. Of 46 associations surveyed, 22 anticipate workforce reductions, while only 9 plan to hire more. Industries hit hardest include automotive, paper, and textiles, affected by weak exports, rising protectionism, and high domestic costs. Investment plans remain cautious, though aerospace, shipbuilding, and services show some growth, supported by higher defense spending. Moving on to Asia, China has announced that it will adjust tariffs on certain products starting next year, including reductions on resource-based commodities, such as recycled black powder for lithium in batteries. According to the Customs Tariffs Commission of the State Council, the country will also cut levies on medical products, including artificial blood vessels and diagnostic kits for some infectious diseases. In total, 935 products will have provisional import tariff rates lower than the most favored nation rates applied to all World Trade Organization member states. The Ministry of Finance has stated that China plans to expand government spending in 2026 while improving the efficiency of capital deployment, aiming to support growth and manage debt risks. The government will focus on advanced manufacturing, tech innovation, and consumer demand, strengthening local budgets through more effective transfer payments rather than broad stimulus. Officials also plan to address risks from local hidden debt and continue programs such as subsidies for energy-efficient appliances and electric vehicles to stabilize household consumption. Analysts say that the measures reflect Beijing's effort to balance growth support with financial stability. In the MENA region, the General Authority for Statistics has reported that Saudi Arabia's unemployment rate declined to 3.4% in the third quarter of 2025, down 0.3 points from a year earlier. Among Saudi nationals, jobless stood at 7.5%, with labor force participation at 49% and women accounting for 33.7%. Most unemployed Saudis, over 95%, are willing to work in the private sector, with many open to longer hours or commuting. Bahrain has implemented a sweeping package of fiscal reforms, including significant hikes to fuel prices, electricity and water tariffs, and natural gas costs for businesses. A government statement has confirmed that the measures are part of a broader effort to strengthen the Gulf Kingdom's finances, which are among the region's most strained. In addition to raising revenue through state-owned company dividends and higher utility prices, the government plans to cut administrative spending by 20%. Iranian traders and shopkeepers staged a second day of protests on Monday after the rial plunged to a new record low against the US dollar. The currency fell to 1.38 million rials to the dollar on Monday, worsening inflation that has pushed food prices up 72% and medical costs 50% over the past year. Recent gasoline price hikes and planned tax increases have added to public anxiety. Iran's currency has fallen sharply since the 2015 nuclear deal, and renewed UN sanctions, regional tensions, and fears of broader conflict have further unsettled markets. Moreover, Noor news agency has reported citing an official at the president's office that Iran's central bank chief Mohammad Reza Farzin has resigned. Farzin has led the central bank since December 2022, and his registration, or rather resignation, will be reviewed by President Masoud Pezeshkian. Former Economy Minister Abdul Nasser Hamati is expected to be appointed as the new central bank chief, according to Iranian state media. The move comes as the rial fell to record low of around 1,390,000 per US dollar amid Western sanctions, economic liberalization policies, and high inflation, which reached 48.6% in October. In the tech world, Nvidia has completed its $5 billion acquisition of Intel shares. The AI chipmaker purchased over 214.7 million Intel shares at $23.28 each, following a deal first announced in September. The private placement is seen as a major financial boost for Intel after years of costly production, expansions, and operational missteps. The investment received clearance from U.S. antitrust authorities in December. Following the announcement, Nvidia shares fell 1.3% in pre-market trading, while Intel stock remained largely unchanged. Oil prices rose by more than $1 on Monday as investors weigh talks between the U.S. and Ukrainian presidents on a possible deal to end the war in Ukraine against potential oil supply disruption in the Middle East. Brent crude futures rose 2.2% to $61.97 a barrel, while U.S. West Texas Intermediate crude was up 2.3% at $58.05. Both benchmarks fell by more than 2% on Friday. And that wraps up tonight's top economic stories. Now over again to Rana, who will take us into the major tech deals shaking up the global economy this year. To you, Rana.
Thank you so much, Hera. We continue our coverage tonight with the key mega deals of 2025. Alphabet's $32 billion with acquisition and Netflix $82.7 billion Warner Bros. Discovery buyout are among the deals reshaping tech, AI, gaming, and media. Let's take a look at the biggest moves and their impact on the global economy. And for further analysis, we are joined from Beirut by digital economist Rudy Shashuni. Welcome to Qnews, sir, and it's a pleasure to have you with us, and a happy new year. Sir, what deals like Alphabet buying Wiz and Netflix acquiring Warner Brothers tell us about today's tech and media markets from your own perspective?
Well, the whole map has changed. 2025 has become the year of technology and media, where they stopped experimenting and started consolidating and making those mega deals. And we're seeing them 32 billion, 80 billion here. It's not just about, those numbers are massive. They are economies of multiple governments altogether. So those mega deals are moving from owning infrastructure to owning the content and owning the distribution for the next cycle that is really coming. So it's more about defense. It's no longer a hype. It's those big players that are buying the assets to lock in customers and, most importantly, reduce their risk. In tech, it means that security, cloud control, and AI infrastructure power is also shaping in those big mega players. In media, it means that they are owning what you see, what you hear, instead of just renting and being on the side. So they are making the news now. It's about scaling. It's about controlling. What matters now is purely growth for this year and for the next one. So it's a huge change in the system, and it's a huge change in the scene that we are actually witnessing of those mega deals that are coming, and we're going to be hearing more and more and
Your
more.
take, sir, do you read this as an advantage or a disadvantage? Or you get both?
It's a catch-22 if you get me, because
I did not
from
get you about it's a
consolidation,
catch-22.
it's more powers. Yeah, it's a more power to tech. So tech companies will be defining those 6, 7, possibly maybe 5 in the future. They will be defining what we see, what we will hear, and what is our opinion. So this is where the negative part, but at the same time, it's more services, more possibly scaled services, better prices, better services, better for us at the same time. So this is where the catch comes, as because we're seeing everything going to be weaponized one way or another. So this is the downside of it. Will also our data, our connections, our media, now they are joined all together with also this be weaponized one way or another.
Okay, so you read it's positive and you read it's negative at the same time. How are Meta, Google Cloud, Microsoft, NVIDIA, and investors like BlackRock reshaping the global AI landscape, sir?
Well, we've seen them this year again. It's no longer about smart models, large language models. We've seen this. It's no longer about supporting large language models or new AI. It's about who controls the compute. So now we're seeing the data center war. Who's controlling the energy? And today, I think Google bought an energy company just to produce their own energy because it's becoming out of control. And who owns the capital? NVIDIA, for example, as a critical supplier for all of the ones that you just mentioned. So it's a center stage for anything. And we've seen investments happening with NVIDIA where the whole market has shifted altogether on a plus sign, where in reality it's the same amount just moving because that company invested in this company. So the same money moved to the other company. And then we've seen a rise of all over. Hyperscalers are turning into a utility like electricity or the internet or whatever. And of course, here we cannot talk about all of this without talking about Wall Street on the investment side, because AI infrastructure as a long-term asset class investments, and we've seen with $600 billion investments in the US, we've seen with projects in our region, in Dubai, or in UAE, in Abu Dhabi, in Saudi Arabia, Humane, and yesterday Qatar also announced they are joining this game. So we are seeing all of this shaping our future in a big time so that they can really control it to the maximum as an investment, if you want, and profit and so on and so on.
Sir, you mentioned that it is getting out of control. Could you elaborate more on this, you said?
Yes, because what we are used to in principle, and then we will see it possibly with the European Union coming and breaking those out of control. What I mean by out of control is companies controlling more of how we do, of what we do, and pushing certain narratives and pushing certain applications. For example, there was a case that happened, and then we are all familiar with. For example, Chrome. Chrome cannot be controlled by Google, and then this is where it's being sued so that they can split the power, because you cannot control the data centers, and what you are seeing and what you are controlling on the desktops and mobile phones and so on and so on. So this is where the out of control of regulations is coming from. But in the same time, it's gonna work for our benefits, but we have to see how will this legalization, especially the European Union, will be playing a big role into breaking such out of control environments.
How are politics and regulation influencing deals like TikTok's US divestiture, sir?
That's how we're talking about. Geopolitics is now dealing with math, dealing with investments. The idea is who controls the data as a national security. It's no longer just a side issue or just a bypassing issue. No, it's the most important part is who controls the internet, who controls the data. And most importantly, buyers are becoming mostly politically accepted, not just financially. It's becoming because they can decide on what you see, so they are playing that big role in the geopolitics. Deals, of course, are becoming slower, more complex, and more regional, but the global tech is fragmenting into those regional ecosystems, and sometimes they are all interconnected into this geopolitics games. And we've seen it with TikTok. We've seen it banning TikTok, for example. Yesterday, they banned DJI, Huawei, and so on. All of those are Chinese. But the idea is we are having a digital divide in the world, the East versus the West. And this is going to be a crazy game. Are we going to go fully divided in terms of the technology side, or is going to be merged into East and West in reality of how we used to deal, where East and West was supplying or supply chain altogether? Now we're seeing this divide as early stage into this geopolitical world. And who's going to follow who? Are you going to follow the China and then you become a traitor, or are you going to follow the West and US and become what?
What key trends should we watch in AI, cloud gaming, and media as we head into 2026, sir?
2026, I think, is going to be an amazing year also. I'm talking a little bit possibly negative on some sides, but at the same time, it's going to shift from the building models to making money. AI, for example, OpenAI is not making money today. It's spending billions upon billions, but in reality,
AI is not making money today?
For OpenAI, guess what? No, it's not. It's making them in investment
Good
promises.
to know, sir.
But I'll tell you why in maybe 10, 15 seconds. The energy and the compute, so who controls more energy, who produces more energy, is becoming very strategic, because if you have 10 megawatt deals, 10,000 megawatt deals, who's gonna, produce this power? The media bundles is, again, it's no longer just a digital form, it's more of a power hand. Gaming and the intellectual property is, we've seen it with EA, we've seen with Saudi how they made a $50 billion or $60 billion investment in this. But the whole game is going towards one thing, which is who will control the narrative of artificial intelligence. And that's my prediction for 2026. Something called AGI, Artificial General Intelligence. If OpenAI, who is the leading in this space, who they created large language model, the way we know it as GPT, if they claim the AGI is there, they will be winning this war. If China comes in and then they declare this war, it's going to be another war in reality. So the next winner will really control that infrastructure, the data, the internet. And otherwise, if we don't see this investments meeting whatever prediction we are having as the next AI generation of how things are gonna
okay, sir, because I'm running out of time, and I have to ask you one very important question that really concerns me inside.
Sure.
Sir, there are generations. Today when we discuss of course, the younger generation, they know much about what you're talking about, AGI, AI, they know all of this. But when we come to discuss the old generation, they know nearly nothing, or some people work hard on themselves. How are gonna we cope with what's going to take place in this entire change in the world?
Yeah,
And in technology on top of all.
we're seeing the digital divide already happening. So
What are
there's
the older generation going to do?
yeah, we're seeing this digital divide happening now, and it's about you. It's gonna start about you. The government is gonna do programs. Society is gonna do programs. Private sector is gonna do programs. Education and universities and schools, they will add AI and whatever. But it always goes to the older generation. What do we do with them, and
I
how
will
can we
not go
integrate
back
them?
to university again, sir.
Exactly, exactly. So that's going to be the biggest digital divide. And the problem is, if I don't decide as an elderly, I'm not entering this digital era, I'm going to be disrupted. But in reality, things are changing. Of course, we are losing jobs, but we're gaining new jobs in AI. But there's basic jobs that will never go away. So, Jensen Huang, the founder of NVIDIA, he's saying that today, I think the best job for people is to go and do fixing, bathrooms and kitchens and whatever, anything related to hand, plumbery, for example, anything related to hand jobs. Those will never go away. There's millions, something in power, because guess what? A data center will be built next to your city. Who's gonna
Okay,
build it?
yes, I'm very sorry, sir. I'm out of time, and I'm very sorry because I
Right.
really wanted to know more about this, but we have to work on ourselves, I think, to cope with what's going on. From Beirut, that was digital economics to Rudi Shoshani. Thank you very much for joining us, sir, and it was a pleasure, of course, to have you with us. Happy New Year. From markets and deals to climate change, we continue our coverage tonight with a look at the economic impact of climate change. 2025 ranks among the warmest years on record as extreme weather and climate disruption strain infrastructure, disrupt supply chains, and threaten global growth.
"2025 ranks among the warmest years on record, driven by accelerating climate change. Extreme heat waves and climate disruptions are projected to cut Europe's GDP growth by about 0.5%, with similar impacts worldwide." The latest United Nations Climate Transparency Report shows countries advancing toward Paris Agreement goals, but at a pace insufficient to cap warming, as climate disasters strain infrastructure, disrupt supply chains, and raise costs in agriculture and energy. Carbon markets hit record highs, with EU ETS prices near €75 per metric ton of carbon dioxide equivalent amid tightening supply. Though ESMA notes 2025 declines and rising volumes for 2025 contracts, Enerdata forecasts stabilization at 70 to €75 per metric tons of carbon dioxide equivalent by 2030. The EU faces divisions over its 2040 90% emissions cut target, including France's push for an emergency brake on natural sinks and foreign credits. Green infrastructure investments surged, with Bloomberg and EF reporting $470 billion in global grids, up 16% year-on-year, led by the US at $115 billion and $386 billion in half-one renewables, up 10%. Munich retaliates half-one disaster losses at $131 billion, insured $80 billion from wildfires, storms, projecting full-year rises like 0.54% US GNI impact. Insurance faces acute stress, with Swiss reforecasting over 150 billion in 2025 net cat losses. H1 at $80 billion, double the 10-year average, including $40 billion LA wildfires. And Munich reconfirming 95% above average payouts. UN pledges fall short, risking 2.3 to 2.5 Celsius warming this century versus the 1.5 to 2 degrees Celsius goal, demanding scale renewables, resilience investments, and cooperation to avert trillions in loss to growth, inflation, and livelihood risks.
For further analysis, we are joined from Washington by Professor of Environmental Economics, Alaa Sarhan. Welcome to Qnews, sir, and Happy New Year. UN funding from developing countries is still far too low. What practical financial solutions could help the most vulnerable nations adapt?
Well, this is a very strategic question, and I have to be here very careful about how to frame the response, because right now the global dynamics and the geopolitics landscape worldwide is very different. We're entering 2026 in a very different world with regard to conflicts, regional conflicts, with regard to the appetite of the international community to be able to combat a very serious existential problem like climate change. I think the international agenda is changing. We have seen that the US in 2025 has pulled out of the Paris Agreement, which is a major thing. So I think the signal and the messaging here is clear to many of the countries that I wouldn't say have historical responsibility for climate change, but I would say that they are major players for combating climate change. It means that, as you rightly said, climate finance, which is basically the public funds mobilized to combat climate change worldwide, they are dwindling. We have seen the trends; they have been going down. So, to cut a long story short, one major suggestion or recommendation, as I put it, would be looking at debt for climate swaps, meaning that many of the developing countries that are even the most vulnerable to the dire impacts of climate change, they have external debts, huge external debts, and some of these debts are not even sustainable. So the idea is how have this big would convene some sort of a big meeting and saying climate change is is a global agenda. It doesn't. The impacts of climate change do not stop at any kind of sovereign boundaries of a country. They go beyond land, sea, oceans, and continents. So therefore, it's in the best interest of all the international community, the 198 countries that have subscribed to the climate change agreement. They sit down and they say, developing countries, especially the most vulnerable of those in Africa, I would say.
And do you read this coming, sir?
It has actually started. We have seen that Egypt, for example, in 2023 and 2024, we were able to sit down with the German counterparts, and we were able to swap some of the debts owed to Germany towards green transition of energy. So we have seen more wind turbines and more renewable energy in exchange for our debt, external debt to Germany. So if we can try to formalize this and start to think more strategically with other countries like African countries, how we could have this dialogue, how we could start to engage with development partners and say, listen, we need to do something about it. Things are not getting any better, as you rightly said. Things are not getting better in 2026. In fact, they're getting worse. Countries' international agenda has changed. Many countries now they have other priorities. They have other strategic priorities. They have other strategic goals rather than climate change. So this is a very dynamic situation whereby we need to go back to the table and say, let's start to think outside the box. We need to find solutions, something innovative, something that is going to make the world a better place for the sake of our children and our grandkids, and for the quality of life. So I think one of the viable solutions would be asking not for debt relief or forgiveness, but just to swap part, or talking about part of the external debts owed to the Western world, in exchange for climate change projects and programs on the ground in developing countries, especially the most vulnerable of those. And I think
Okay, sir, got your point, and I'm very sorry I ran out of time. And wish you a happy new year from Washington. That was Professor of Environmental Economics, Ali Sarhan. Thank you very much for being with us and for your informative knowledge and on top of all your time. This concludes the second episode of our special economic coverage, highlighting the top and most dynamic sectors of the year. Follow us over the coming days for more insights into our other key sectors. Of course, on behalf of our editor-in-chief, Hanan, who worked hard and came up with this wonderful idea of a wrap-up of 2025. Thank you very much, Hanan. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. Thank you for watching and stay tuned for more updates on Q News.